Yeah, so on behalf of all the participants and IIM Trichy family, I would like to welcome
Thank you.
our guest Murali Vaidyanathan. So before we begin, just I would like to give, I mean, some of you might be knowing about Murali, but just for the sake of formality, I would like to introduce. So he is the senior president at Equitas Small Finance Bank Limited, and as well as a country head, branch banking, liabilities, products, and wealth at Equitas. So as a strategic banking leader with over 20 years of experience, he has consistently demonstrated success in setting up branches, creating business verticals, and driving product innovations and profitability. So before his assignment at Equitas, he was associated with the Kotak Mahindra Bank, ICICI Bank, Citigroup. And talking about some of his educational background, he has done his general management program from IIM Ahmedabad and has a lot of certification in investment compliance and operations from AML and finance management. So in the area of digital transformation, he gained critical insights from the artificial intelligence strategic for leading business transformation program at the Kellogg School of Management. So these programs have provided Mr. Murali with a global perspective on strategic management and leadership, empowering him to lead business transformation through innovative strategies and digital advancements. So we are lucky to have Murali with us, and yeah, the floor is open to you.
Thank you, sir. Thank you, Professor. I think that was a good introduction. So the topic given to me was what is the banking or the BFSI future. So BFSI starts with B, banking. I thought it's a too vast a subject. Let me start with banking, and as we move on, I'll touch few aspects on what's happening on investments, what's happening on alternate investment fund, and then insurance a little bit. But this by itself, my presentation will take you through the overview at the structural level as well as thematic level, where we are heading for next 25, 30 years. So before getting into where we are, I just want to take some years back or some centuries back so that it gives a good prelude to all what is banking. And after all, history actually gives us the opportunity not only for data re-representation, it also gives us the process of change that has happened in terms of how it got transformed over decades, centuries, and actually it's before Christ business what I'm talking about. Just to give you a prelude to all of you, let me wish you first good morning. We are very closer to good afternoon, and I think there's a good opportunity for me to interact with the next generation of aspirants as consumer as well as future employee. I think I'll take this opportunity to wish you all a great future also in coming days. Whether this session will add value to you as a career is one point, but nobody can escape the philosophy of handling, earning, and multiplying money. So even if I can make a dent in your personal habits through this, I think this session would have done some insightful ambition what I have in percolating into each one of you. Just to give you a prelude, 2000 BC is what the first recorded banking transaction that has ever recorded, which means we are talking about thousands of years back. And at those point of time, places of worship were actually banking points. So we are going back to that stage. And bank as a word, most of you will know it's come from Italy, and where it's called bench, and or in France, if you go to French, it's called money exchange. So people used to sit across bench, they do the transaction, and the worst part is they'll break the bench after the transaction. That's how the world, invented the word called bank. So we are talking about a instrument which helped humans to convert their time into perceivable, ambitious, need facilitating, and necessity build-up concept. That's called money. So we are going back to that stage where it was primarily someone will come and give some money, and these people will deploy, take some commission, and give it back to the depositor. That's what was happening in places of worship, in some places society, in some small kingdoms, their treasuries, and that kept evolving over a period of time. I think the oldest bank that ever got created, if my memory is right, somewhere in Italy, it's in 1462. where the concept of an institution becoming a bridge between depositor and, at that point of time, they are called savers and borrowers. So this is what is this concept all about. I think this is the oldest industry which we are talking about. While concepts have evolved, themes have evolved, specializations have evolved, but the fundamental theme of saver driving the economy never changed. So over a period of time, what had happened is how the velocity of movement has changed, and how did velocity movement happened in due course of process. What all happened? Okay, now we will come back to recent past, that is pre-independence era in India, where banking we are talking about, let's say 1840s to say 1947. We used to have three banks. Actually, India had 600 banks during that time. I think it's bigger than what we are seeing at this point of time. Many private owned, society owned, cash centric, and then business centric opportunity bank. And there are a few communities which are very active. So that's how banks got created. But fundamentally, we will talk about Bank of Madras. Coincidentally, is the origination point where Britishers started this bank for primarily they established three entities. First, Bank of Madras, then Bank of Mumbai, and then Bank of Kolkata. These were three what was there. And before Bank of Madras got created, already there was a small bank which was running in South. It was called Carnatic Bank. Not many would have even heard it. When you get time, you go, and it was created by artisans and musicians. And those were the high earning jobs, and at that point of time, HNIs. And that got merged into Bank of Madras, and then Bank of Madras, Bank of Mumbai, and then that's Bombay and Calcutta got merged, and it was called Imperial. And post independence, that's called State Bank of India. So one can go back and say State Bank of India started somewhere in Chennai called Carnatic Bank. That's the as you go back connecting dot, and that's the reality. So what happened during this phase was trade was happening, limited trade was happening. All the individuals want to save a little bit, but want to borrow a lot, and it was highly regulated. So then what happened was the ultimate objective of societal development was not happening. So 1960s, there was something called nationalization movement happened. The primary intent of nationalization movement is how do I connect the last mile? That is the last guy in the system. How will I, who is in need to start an entrepreneur? Because India entrepreneurship was always there. Let's be very clear. If we go back and see, we were naturally artisans. We are naturally musicians because that's how we were groomed and brought up. So how will we make those products scalable? But unfortunately, nationalization, when it happened, too many banks, fragmented opportunity. So, and technology was not there. So everything was a cumbersome process, manually driven. So it got stuck somewhere. It got stuck somewhere because we were late to adopt automation at that point of time, and world was hitting ATM, world was hitting automation. India was slightly late till 80s. So that was one. So then what happened was this nationalization was not taking off in the way and not solving the objectivity. Reintroduction of privatization happened in late 90s or early 90s. That opened up the channel, and that was the first time Indians start, feeling there is something called consumerism, and consumer bank as a concept started evolving. And that started happening in till say early 2000. Until that point of time, in between, there were automation, instrumentation, and computers started hitting in. And for the consumer, ATM, plastic payment called card, and then phone banking started coming in. And then a little bit of internet banking, 2000, early 2000 started. So this is the evolution of backend. At the front end, consumer became key. And prior to that, only corporates and project finance was the focus. So that's why if you go back and close your eyes and ask your parents, or if you have a slightly senior elder brother like me, the earlier account open, one needs to have somebody introducing the other person. It's called introducing. Then they have to have, it was a very cumbersome process. Then it was going on. Internet banking started penetrating. The tipping point happened when phones became smartphones. That's the tipping point, which means for the first time, a person is getting exposed to e-banking, that is mobile banking, e-commerce. Suddenly, it started becoming a banking marketplace by itself, and commerce have started coming. And the next stage, what happened is what we are all into it without knowing it. That's called UPI. And it actually turned upside down in terms of what can be the velocity. And today we are on a highway. And in between, thanks to the present Prime Minister, Mr. Modi, who got Jandan account into the scheme of things. So financial inclusion. So for the first time post independence, digital actually democratized through Jandan accounts, and specialist banks called small finance banks got created. Since I've seen foreign bank, I think I was telling another day when I met someone, if someone sees my career graph, it'll be very confusing. You start with Citi and then move towards ICICI, come towards startup called Kotak, then you are getting into SFB. There cannot be a natural progression of getting deeper and deeper into the society. So I'll come to the SFB part last. So this is the space of evolution from 2000 BC to say 2015, where absolute threshold of mobile banking coming in thanks to COVID, in the sense that what would have taken 20 years for people to adopt, learn, people learned it in 2-3 months. And today, if you see, the velocity of transaction has moved the consumer into do-it-yourself mode. So from a position of strength to position of best of the strength, Indian banking system mode, despite being the late adopter. And from here as a platform, I'll take you all through the slide so that one is very clear from saver borrower syndrome to how world has moved or transformed, I can say, into saver, payer, spender, investor. And those are all the things which we will cover in the subsequent slide. Any doubt till now? Shall I get into the presentation? Yes, sir. Thank you. So what I was talking about historical order, that is pre-independence and independence, is centered around because regulatory was getting created. So everything was on a manual mode. So everything centered around regulation even today. But today the advantage is regulation is a technology by itself. It's far more easier for us to get that aspect done. So banking is nothing but compliance, risk management, and then the business model. So regulatory, banking, and then was technology. And then last was customer. That is why the reach. So the flow of money, the velocity of money, the guidelines towards distribution and collection of money were very different, say 50 years back. Now the emerging order is reverse. We keep customer at the center. To reach the customer, what should be the technology? It can be mobile, it can be wearables, it can be on-prem, it can be on cloud, it can be a fintech partner. Then banking evolves, which means a branch is not a necessity. Branch can be a transshipment point, or branch can be a hub, a peripherally, and then connecting through digital. And then regulatory is inbuilt into the branches because it is auto-built. So today, that's why if you see many of the banks, including us, we call an account called Selfie, you can log in and then just open the account end-to-end through video KYC. So because everything is inbuilt, risk as well as compliance. So the emerging order is absolutely upside down of what was happening. So what has changed? India Stack. When I say India Stack, India Stack is one of the front runner globally. I'll say what we used to call eKYC, that is based on Aadhaar, then biometric. I think we actually showed to the world what can we do with. So there are three sort of KYC one can do. One is physical, one is eKYC register where one can fetch and then confirm whether it's you. Then it's a biometric and based on Aadhaar. So this India Stack, thanks to Mr. Nandan Nilekini and team, who evolved into Aadhaar as a primary document and linking everything. That's why sometimes people get frustrated. How many things should I link with Aadhaar link to PAN, PAN link to mobile number? It's finally becoming one convergence point, which we'll cover in the subsequent side. So this has helped us to get into financial inclusion, because today a small ticket borrower, for example, a microfinance customer in a remote place, can actually get 20,000, 30,000 rupees based on these biometrics and based on the Aadhaar is essential. So this is one big evolution already happened. The extension of it I'll cover in the subsequent slides, where it's called OCEN as well as ONDC. Next is banking. Banking by itself changed thanks to, as I said, digital adoption of consumers and bank, and fintech partnership has actually evolved and actually made cost of distribution much cheaper than what it was. And at any given point of time, all are equal on the platform and can consume it. Third is technology. The app ecosystem, see, earlier to open a branch was a very tedious, even today, from rental to operations to getting the people, train them, and then meet. Today in an app ecosystem, 95% of the quality is sustained and balance wise depending upon the bandwidth. Like this call also can go for a toss, you have bandwidth. Then rising of cloud capabilities. Now, cloud is playing a very, very important role in entire financial services, because the entire ecosystem of ledger management to GL management to account management to data repository, cloud has become an inherent feature which it was not even there, say, 10 years back. Last but not important thing in thing is data analytics ability. Now everybody keeps saying data is an engine, data is this, that. The reality is data is not only the fuel. Data, converting the data into information and into application, thanks to AI and ML, where artificial intelligence is going to go up to generative AI, which means I can predict, I can tailor make a product and hyper personalized things. This is going to be the reality. Last, but somewhere I'm getting an echo. Now it's okay. Last but not the least, customers. India is the largest smartphone market in next 10 years. Already we have these numbers keep changing every day. Now the important part is the smartphone going to be the branch for the customer? Is the smartphone going to be the transaction point for the consumer? And what is going to be the user interface and user experience? That's going to be one key development from consumer side, which means anyone's expectation is on par or better than what's available. COVID accelerated digital adoption is something which I think we should salute all the people. Today, most of us know from a tea shop to a hotel, we are able to get what we want, either through scan and pay, either through UPI, either through plastic payment. I think that's something we should appreciate ourselves. And last but not the least, customer is going to be brand conscious based on user interface and user experience, which means the traditional banking model is what I was 140 years of legacy can be challenged, because here agility and nimbleness is going to play a key role. This is the paradigm shift happening at consumer level, technology level, banking level, and most importantly, regulatory level. Now I'll give you something called industry highlights. What's banking landscape we are talking about? Today we speak about CD ratio, asset, overtaking liability. Those are all realities. But always understand, when asset overtakes liabilities and if the depositors start shying away in not depositing and then keeping in cash, what is the impact is what we are going to see now. Today we have 21 lakh crore as current account. Current account are those accounts where bank pays zero interest. 66 lakh crore is on savings account. So this is where you pay 3.5%, 4%. That's why banks say I will focus on CASA, because these are all low cost deposits. 125 lakh crore is the time deposits. So this is the market size which is growing at 12% on current, 10% on savings. When you say current is growing, it directly reflects the economy, which means more businesses are getting opened, more entrepreneurs are coming in, and more money is getting generated. So that's the positivity. So when current account keeps growing at this rate, it's a matter of time before savings account catches, and then it can be TD or it can be mutual fund or it can be broking. Those expanded investment portfolio starts growing. So this is the industry of commercial banking, 200 lakh crore, 12 crore, which if the interest by September will become 220 lakh crore. That's the reality. Now, second one, currency to GDP ratio, one needs to understand. See, when you say hard cash is the velocity dampener. Today, what this chart shows is what is the currency in circulation to GDP. Today, if you see India is on par with almost, I can say, Euro area. 12% of money which is there in the system is in the form of cash. That is with you, with me, 100 rupees, 500 rupees. Somebody will give 2 lakhs, somebody will give 50,000. But the biggest drag is moment you keep the cash and cash is with you in the instead of in the system of banking and with you, it actually drags the growth. So if you go and see, for example, Sweden is an ultimate example where it has come down closer to 1.5%. And Sweden is the first country 3-4 years back. I don't know how many of you tracked. They said we won't print any more currency notes. All will be in the form of digital currencies only. Somewhere world will evolve that, because That is going to be the differentiator if India has to become 10 trillion or 20 trillion economy. The velocity of money flow needs to be curbed, and for that one of the easiest way is currency to GDP. Next is retail digital transaction that I already touched. I think we are far. I'll give you the value and volume. It's an index. I think we are growing at a pace which world has never thought of. Sum of all US, UK, EU will be actually smaller than our growth rate as well as our index. Now, what is payment spectrum? I'll go slightly right to left. Here we are talking about digital transaction in terms of value and volume. Volume is growing at 44% in the sense that what we are talking about, here I've given in lakh crores. Okay, sometimes million, billion will confuse many. So for the year, 21, we were in terms of value 3,000 lakh crore, which has gone up to 3,659. Why 21 we have taken is just the effect of COVID and the impact. Now,
Murali, do you like to take questions in between, or can we?
No, I will take it at the end, no?
Okay.
Or do you want it in between?
No. There is some question like many literates ask for rupees 10 and 20 denomination from cash counter still. So somebody asked maybe to relevant to that.
Okay, I can. If someone has it till now, after this slide, I'll take it.
Right. Yeah.
So here I'm talking about what digital has done it in terms of, if you see 44% in terms of transaction volume, and most importantly, value, we thought it will taper. It's just growing at a speed where, so which means now many of the transactions, if you see in your own life cycle of what you're happening at this point of time, UPI IMPS is now ruling the chart. Then for business, NEFT and RTGS, so which earlier used to be check, which earlier used to be, say, cash, now those are actually dwindling. So digital transaction space is going to redefine. Now in this, who are the stars? UPI, of course, yes. NASH payment, this is called a National Automatic Clearing Solution, where when you earlier, I don't know how many of you know, when you present a check of an outstation, it is sent to those corresponding branches. From there, it will be presented to the clearing. By the time you get credit, it used to be weeks and days. Now NASH has become one thing, and FASTag has eased out things movement on the highway, and it's a big thing because one can visualize a Mumbai where check naka used to be in somewhere in Borivali or Vira Road, used to have kilometers and kilometers queue. Now the movement of goods, thanks to this FASTag as an instrument, now FASTag will have multiple applications in coming days. So these three actually redefined us. Cash cows, when I say prepaid cards, now, in fact, even for the servant or a migrant labor force, they're not taking cash. They are only taken a prepaid card, and the salary is loaded onto it. And you can give this prepaid card for your kids, for your spouse. So prepaid card has become a gift card. So it has taken multiple forms, but these are all chargeable, and these are all have interchange. So that's why it's put as cash cow. Second is ATM. People have started taking cash just in time. Despite that, we are 12% because of certain amount of cash transaction which we are seeing in the marketplace. And last but not the least, debit card circulation, which is helping on settlement of payment terminals as well as ATMs. Now, what is the question mark is, how are we going to link this credit card to UPI, credit card to NASH, so that already what we call it as UPI credit lines, which is going to come in, how it is going to have an impact is going to be one thing. And Bharat bill pay system, today we pay only essentials, or today we pay only limited billers. If all the billers comes into it, now the impact of that can be, it will further increase and migrate the digital transaction in a way which India foresees. So this, before I get into it, I'll go with a few questions if anyone have till this point of time. Any questions?
No. You want me to read the question for you? I can read. Because
yeah, I'm not able to.
Yeah. So one person was saying, still many, when we talked about, gradual removal of currency.
Digital currency.
Yeah. So still many.
So still many are asking for 10 rupees and 20 rupees notes. When we wanted to moving forward to digital currency, still are asking for 10 rupees and 20 rupees. And still we are printing many.
Who is asking 10 rupees, 20 rupees? I'm not able to get you. Many
customers, bank customers, many are asking, still they are asking for a 10 rupees, 20 rupees denominations. Even though they can use for a UPI, still they are asking for that.
See, we can't in the bank, in the
See,
economy,
this
we
is
can't.
an actual customer or a segment centric question. I'll tell you, today we fund to microfinance customers. Okay, we are one of the largest microfinance funders in the market, where we convert forced entrepreneur into an entrepreneur. That's a journey by itself. You identify a set of women, give them skill training, then you give them a loan, and then they come up the curve. This is their natural progression. There, they have moved towards up to 50 to 60% on digital payment. So there will be always 30-40% of people or at the bottom of the pyramid who will need a certain amount of change. So that will continue to exist. That's why I said 12% of our currency circulation is too high. It needs to come down, and we and Eurozone are 12%, at least at a US level of 6%, 7%, and that will help the economy. So increasingly, that is why if you see the denomination, minimum threshold is kept very high. 50, 100. So at the lower end of pyramid, there is a demand for it. And that 30% will continue to exist, but that will not contribute to 12% of cash in circulation.
Okay, sir.
Yeah. So Sudarshan, you were asking something.
Yeah. Thanks for sharing those insights, Mr. Murali. I think two questions I have. The first question is, I think the small finance banks are playing a key role for the financial inclusion, right? Like you guys. How you see the role of a small finance bank evolves in the next 5 years, particularly under the unserved market?
See, India's absolute recent study of McKinsey says underserved, we'll call it underserved market, is 25 lakh to 30 lakh crore. 25 lakh to 30 lakh crore is the market sizing. Now, small finance bank came very late into the existence, and I think we are the primary drivers of financial inclusion, and also creating entrepreneurs. Because if you see, go and see a microfinance, I keep saying our bank doesn't have a model, only a role model, and those are all our customers. You go start with a customer of 15 to 20,000, they pay well, they establish a business. Next limit is they come and ask for 30, 40,000. These are unsecured. Okay. So we created something called, there are two ways to microfinance, JLG or SHG. One is called self-help group, another is joint liability group. Don't get into that detail of it, because this call will then get, for 1-2 days. Then what happens, out of 100 microfinance customer, 15 to 20 graduate towards setting up a shops. We have grown with those set of people. Now those shops, they give their house as a collateral and start the businesses. So now you had please understand, visualize. Forced entrepreneur, when I say these people have less of education, very less of skill, and they don't know what to do. So they just start something. It can be selling flowers, vegetable, making idli, multiple things. These people are spotted, skill trained, and given money. Now they work, create the business cycle, evolve into setting up a shop. Then we have some product called Micro Lab, where we actually take their house and give them 2 lakh, 3 lakh. There are, from that is 15 to 20%. Out of that 20%, evolve to the next stage, setting up 2 or 3 shops. And we have set of people from forced entrepreneur to people setting up multiple shops. And if India has to create continuous employment, creation of entrepreneur is key, and creation of entrepreneurship cannot happen in isolation without SFB's participation, because SFB license by definition says 75% of your lending should be to priority sector, and 50% of the lending should be less than 25 lakhs. So it absolutely fits the missing middle, what India started as nationalization and reprivatization program. So there is an umpteen demand. Even having 10 more SFBs is going to do only good to the society, and SFBs will evolve. And like how microfinance customer moved up to 2 shop, 3 shop, you will have few SFBs converting into a universal bank. Despite getting into universal bank, they will continue this cycle, because nobody can jump into a microfinance business or a SFB business and then just jumpstart banking, because this is labor intensive. This is market and demography understanding and close relationship management. So there's no dearth for opportunity, no dearth for capital. It's only going to expand.
Thanks, Mr. Murali. To follow up on
Need of
this
small
question,
finance banks, then what is the need of small finance bank? When the commercial banks were failed to, you mean to say that commercial banks were failed to meet the requirements for the underbanked or
I don't need to
underserved?
see it. Figures are saying it. Because if you get into the deeper part of it, you just ask yourself if your credit score is above consumer banking. Let me start it. When it started in 2000, many people never even had a CIBIL score. So CIBIL got created over a period of time. Once your track record is established, all private banks jumped into it endlessly. Okay. And that is how credit score got created. Today, most of the banks give money to the same set of customers in multiple forms. You will have a HDFC card, you will have a ICICI personal loan, you will take Kotak home loan. So it's a vicious circle. Nobody was going towards the bottom of the pyramid to create new to bank customer, to create this endless thing. So this will expand the credit base of India. This will have more people coming into India. And this was not done because at that point of time, this digitization, this automation, this technology was not available.
Yeah, you're right, sir. And now what is this trend? Even the small finance banks are running up for getting a universal bank license. Recently, I saw that AU Finance.
That will happen. That is a natural. That doesn't mean that their business model will get changed. That will happen. See, everybody will naturally progress to next level, but you can continue to do what you are continuing to doing. See,
Then,
universal bank, being a universal bank has a lot of commercial dynamics which you won't understand. It unlocks the capital. It gives you an opportunity to.
And restrictions on lending also will be now there is a cap. Your mandatory, your statutorily required to lend 75% towards this private sector.
Correct.
And when you move into the universal banking license, you will have the leeway of coming down to I think 40%. You know.
Yeah, 40%. That doesn't mean that I should do 40%. I can still do 75% and I can sell the assets to other banks who are in need of it. You unlock from, see, today we are sitting on a 20% capital. Okay.
Yeah.
Most of the private banks are at anything between 11 and 13 average. So I unlock 7% capital. So this has multiple advantages. Okay. So business structure is independent of what you are called. Technically, if all banks would have actually done 40% new to bank borrowing for last 70, 80 years, many villages would have become town, which we are creating. Yes. That's what we are creating.
Yeah, I think we will continue.
Yeah. So let me get into the, I have a hard stop at one. No? That's my only request. India stack. Now we have seen what was the, in last 4 slides, what is the industry highlights? What is the paradigm shift? Now we are getting into something. What is India stack? So what is the next stage? What's going to happen? Now we are talking about concern-based approach, which means account aggregator. Account aggregator is one interface where they have multiple data points of multiple financial things, which will help quick decision making for banks and financial institutions in terms of loans, in terms of sizing the wallet, in terms of positioning. That's going to be one consent-based mode, because data privacy is going to be one major reform that's happening in any time it can hit our life, and which is going to protect the consumer big time. So consent-based model and account aggregator as a combo is going to be one game changer. Things will move out. Cards and all will move out. 5 years from now, it's going to be wearables. Your ring, your specs, your watch, your keychain, your shirt. You never know what can. So wearables getting into payment space is going to be the next big thing that is going to be happening. And wearables have already entered the market. So now how effective it is going to be is the test which is happening. There are countries where chip-induced people are being tested. Your chip is induced into you and you just move and do transaction by waving hands. So multiple things are under R&D. Pipeline is data governance, as I said, and standardization. Standardization today in the sense that laws, business models, many things will get standardized. And that is something which is going to happen. Paperless is the reality already, thanks to Aadhaar, eKYC, and DigiLocker. Next thing will be tokenization and virtual cards. So which means your wallet will be virtual and your debit card or credit card can be virtual. And that can be the absolute tipping point, because that brings down the cost of operations. Third is cashless. Already IMPS, UPI and e-rupee is there. OCEN and CBDC is going to be, when I say open credit architecture, I am covering on a slide. CBDC is digital currency issued by our regulator and Indian government. So that's going to be one phenomenal stuff, which means printing of cash. Automatically, the 10 rupee change, what you're talking at across all levels, will vanish. Presenceless, Aadhaar biometric authentication, e-sign and ONDC has already come in. Next is going to be regulatory tech, which means self-governing as well as institution governing is going to be a technology-centric activity. This I'm not touching because it's a very, very detailed and very, very complex structure. Just understand RegTech is going to be one next big thing that's going to happen. What was the traditional approach? Branch visit, ATM, cash, physical documents, signature, information sharing. This is what were the traditional approach. Today, what are we talking across the globe? Neobanks, which means bank has one HO and then only their branches across all the mobile. Digital payments, 100%, this digital solution. UPI and e-rupee, which is going to be a very big reality. DigiLocker, you fetch and give consent and then keep sharing. Aadhaar will become the primary and account aggregator will become the bridge between financial institutions as well as marketplace. Now, digital cases, already you know, fintechs, digital e-com, most of you know, startups are getting into regulatory, legal tech, and it's going to be one important thing. And why digital cases is in this gig economy and open banking. When I say open banking, it's not marketplace isolated or it's not bank isolated. And it's not bank to bank, it is a separate firewall. It's going to be one open banking where I'll send you all the PPT. This will give you the entire insight of what is extended customer and how do you institutions are going to even monetize their data. So open banking is something which is going to be the critical thing. So fintech space, I was saying, RegTech, these are all the companies, IDFI as well as Finbox. For example, video KYC is a regulatory. How do you do KYC at a remote location, which has already come in. InsurTech is something which you all know, Digit, ACCO as well as Policy Bazaar, where it's an open platform. You can go give your feeler and you get multiple quotes. And we are also creating something in Equitas called InsurTech, which is first will be assisted model to our consumer, then it will be expanded. Third is investment, Zerodha, Upstock, as well as Grow. All of you know where that's a platform which gives you linking their investment account to the banking account to invest in mutual funds or trading or even specialized funds which they have. Payments, yes, all of us know payments. Unknowingly, you have Paytm, PhonePe, Razorpay, all of us started using. And this has become a very big interface between banks and the merchant, peer-to-peer. So which means today you don't need an account number to transfer. Also, if you know the mobile number also, you can transfer. That's the quantum of development payment space has undergone. Digital banking, Neo is our partner, Jupiter, where they go and get the demography-based and application-based consumer to get entire banking proposition in. Now, P2P lending, it has highly regulated, but people have started where if you have money and if you want to lend and if you need a common platform, it's already created, which means actually saver can become a banker and then start directly disbursing, and platform will facilitate that. So this is the fintech space that is evolving. Now, how it is evolving? First is, so this before getting into the English, all of you, I want you to get into the hexagon part of it. Entire banking across the industry as well as across the BFSI has become API centric. All of you are aware of what is API. It has become AI and ML, which means the machine learning process as well as artificial intelligence and multi-layered structure has become a reality already. Cloud computing is one thing because cost of storage as well as cost of operation crashes, because cloud computing is most favored, and you can keep expanding as you want, and infinity is the size of your computing ability. So clouds occupying the Internet of Things. Yes, of course, when I say wearables to bank account, everything can be interconnected. So Internet of Things. Blockchain will come into it, trade and finance, but finally blockchain will be the technology disruptor for banking as an industry. Today, we are not on blockchain. It evolved multiple things because in blockchain, the three convenient advantages, traceability, and most importantly, parallel processing. This too can be the game changer. For example, from sequential processing of banks, it can become a parallel processing, and that can bring down, and when you do parallel processing, few of them, we call it as RPAs, robotic process automation. So RPA in conjunction with blockchain is going to be the future, and few of the banks have already got into the corporate banking module onto it. big data analytics. So a bank, if you see, technically becoming a technology company, technically becoming a data warehouse and EDW, technically becoming an innovator and disruptor. So it's evolved from only a custodian of money and disbursement of money to technology facilitating. So what is open banking? Secure data sharing and innovative finance products, which means when I say that if I want to fetch who you are and what you are in an open banking mode through API, I can actually cross-feed and get data. Today, for example, credit score of you or CIBIL score. So like that, multi applications will start coming in.
Network
Fundamentally, this digital transformation cost will increase the thing about that is user interface and experience is going to be technology based. So customer experience is, as I said, their expectations are going up. So which means consumer, I will start doing hyper personalization and generative intelligence through artificial intelligence to isolate, individualize, personalize, and target. That's going to be the reality. That's what when we talk about tailor-made customer journey, what you have it will be different from even what your spouse or kids are going to happen. And leverage physical and digital. So there will be a physical point to build trust, to build credibility, but it will have entirely, it might happen there are already few e-lobbies where there are no man, only digital. So do it yourself is going to be the reality, and people would have by that time got trained, and these things should happen in next 3 to 5 years. App and web-based journey, so your branches are going to be in every smartphone. So how convenient, how light, how nimble, how agile your app, that's going to be the important thing. And processes of digital, when I say digital, end-to-end STP straight through process without manual intervention will be close to 80% of the entire operations. Today it is 45 to 48% of any financial industry. And last but not the least, digital enablers through fintech, through multiple regulation, through multiple injection, it will start happening. Just I want to see what's biggest thing that's happening in ONDC, because this is something going to transform, which is not available. Today, ONDC is going to be, we are used to Amazon, Flipkart as a marketplace. ONDC will have Amazon inside is the reality. So earlier, you used to have everything in a single app. For example, Amazon is a single, you go to Amazon, you search, build cart, you will have your own bank account or UPI linked, and then you will manage the catalog, order fulfillment, returns, delivery, everything. But here in after ONDC, there'll be a retail buyer app, which means search, bill cart and payment gateway will be handled by set of banks. Retail supplier app, catalog management and order, which means the entire market is going to come in. So all these big guys are already in. Third is logistics sellers are already come. And this entire ecosystem is going to be one platform. And this traffic is going to be mind-blowing, which people have not seen. 2 years from now, we are going to see 300 to 400 million. And it can be anything. It can be anything. I think everybody will start using it because buyer, seller, as well as bank, because banks will find opportunity to lend then and there. Banks will find opportunity to fund wholesaler. So ONDC is one big game changer. Already trials are on in few markets and it started giving very good results. This is ONDC, Open Network for Digital Commerce. So we earlier had e-com separate, mobile banking app separate. Suddenly you're going to have an interface which is API fetched on either side, from supply to delivery to supply chain to finance. And OCEN is open credit enabled network. Huh?
Sorry. Yeah.
Okay, please be on mute.
See, OCEN is open credit enablement network. Today, we were talking about financial inclusion. Still, with all these things, we are not able to reach 50% of the population. So this will be a mode through which where an app is downloaded, where that through other KYC or eKYC, this will be done. They can do BBPS. They can get through account aggregator. I'll know who all is there. New to bank customers will start coming in. And most importantly, since it's a consent based, it's going to be, I can disburse it incrementally as well as new instantly. That's going to be, and what they are talking is 1 trillion is going to be, dollars is going to be the unlocking of, capital and creation of capital that's going to happen. And up to 50,000 rupees, everyone is going to use this channel as a, so increasingly microfinance society, say 10 years, 15 years from now will be virtual. Today you have a center meeting, you have somebody going, meeting the consumer. Suddenly everything will start happening. And OCEN is one great game changer because it's going to convert many forced entrepreneur to entrepreneur. And second important thing is ONDC. Now with that note, we have some time. I think somebody asked SFBs. SFBs doesn't only do banking. SFBs are also responsible for the upliftment of society. I think that's the very important part which one need to understand. There is a difference between work and purposeful work. If we keep on giving it to Murali Vaidyanathan to buy multiple cars, yes, good for the bank, good for Murali. Murali will pay interest. That's one part of the story. But if I create a society which through forced entrepreneurship to making them business class, that's going to be the journey which all these SFBs, including more so with us, we are into. And in this journey, I think not many people, many of you will be aware, we run 8 schools. We have done close to 6 lakh skill training. 6 lakh people got trained. And when COVID happened, we gave vaccine to million plus. We create an ecosystem around. See, what's the fundamental difference between a banking, other banks and us is, I can see few of the SFBs and few of the institutions. So they do a transaction and move away. Here we go to a marketplace, do a transaction, we do skill training, we do medical camps, we do eye checkup, because when you are making a forced entrepreneur into an entrepreneur, the biggest collateral is that person by himself. More he or she is healthy, more is so. That is the genesis of the concept of SFBs, which one needs to understand. Second part of it is we run 8 schools and 1 cancer hospital on our own stuff. That's something very significant. We are the only institution where we are committed to 5% CSR. So the social responsibility and creation of social capital is the foundation on which few institutions are built. And I think we are on top of that in terms of contribution. This is what I want to, somebody asked, what is the difference between MFI company? MFI is not a bank here. SFBs is a bank, licensed banking entity where we can take deposits. So we operate on duality in SFB. You take deposits from overserved and overcrowded and HNI and go and serve the underserved at the bottom of the pyramid. And that's why, since this risk reward ratio is high, you consumer get better rate of return. MFI cannot borrow from individuals. Second part of it is housing companies are nothing but who is focused on affordable housing or affordable plus and LAP as a product, as a standalone entity.
So, Mr. Murali, just I have one question over here, right? I think as we move forward, right, the future of a branch banking, how you see as a in an Equitas standpoint, right? Do you feel the physical branches plays an important role? What kind of a customer engagement has to be changed in the physical bank, because the digital is being more adopted? In aligning to that, there is still the challenge of reaching to the last mile customers. How that will be solved?
See, there are 2 things. Branch will continue to exist because branches are not, their concept will change. They will become experience centers. People will not go there for rudimentary transaction. Most of you in this call have never visited branches in last 5-6 months. All of you know that. So is me. So it will become experience center, where it will become a investment center, where it will become a transaction center, but it will become an experience center. Like how? So, and it's also key marketing activity in that catchment, because it builds trust, hope. Finally, banking is also trust and hope. Okay. So branches will not vanish, but the quantum of branches will come down, and branches all will be, which we call it as digitalized, which means we will have minimum number of people and maximum number of digital solutions out there. So increasingly, as I see, say next 2 years from now, we will have branches with 2 or 3 people, but you will have a digital kiosk, you will have a CDM, then you will have a biometric to authenticate transactions. It's going to move towards that direction. Already we have started. So branches will coexist as experience center as physical zones. What was the second question?
Second question is predominantly, today there is a lot of challenges of reaching the last mile customers, right? What are the strategies is being used by the small banks?
You saw OCEN, no? OCEN, already we launched something called Selfie app for loans, where people can download and place a request. So increasingly, banks, today intermediaries are playing this app-based business. Banks will create their own, and we will be part of OCEN. So once you have open credit enabled network, then you are reaching everyone, whoever wants it. Today, if I want to buy say costume or say chili, I just go to Amazon. I'll go into ONDC. So last mile connectivity up to certain value will be based on your credit history and will be based on open credit enabled OCEN, and third leg only will be branches. Because please understand, when you give money to a host entrepreneur, it is on an assessment mode. I go assess your intent. I go assess your content. I'll train you for content, understand your intent, give you money and grow with you. This is called microfinance as well as bottom of the pyramid lending up to 5 lakh, 10 lakh. It starts with 10,000, it goes up to 10 lakh. So please, conceptually, this is very different from program-centric lending, which means program-centric is consumer banking. CIBIL score 750, issue him a card. There's no great science involved in it. Algorithm can play a role. Next is SME lending, cash flow based. You go understand the balance sheet, set the limit. So all these three, last mile connectivity for the individual will be digital. And let me tell you one thing, since you asked it. So I was representing Hitachi along with for some payment council. We are talking about currency. If I am going to give it to a certain people with MCC locked, which means if I give you money for student loan, you can use it only for fees, hostel fees, and your say restaurant, which means you can't use it for alcohol, you can't use it for recreation, entertainment. So locked in money concept is something very big, which is going to come in, and it will start with Singapore and it will expand everywhere. So the advantage of digital currency is you can prefix the limit and the merchant where you are spending. So multiple things are running. The value and concept of money, the form of money, and the intent of money is going to get regulated, and it's going to be the largest transformation which we'll see in next 10 years.
Another UPI kind of thing RBI is going to launch. It is already in the pipeline, that is called the ULI, Unified Lending Interface.
Yeah,
that is also on pay.
Yeah, OCEN will be there, unified lending will be there. See, moment you digitize it, no, what you call it is what was the confinement earlier? Why after nationalization also we couldn't reach a village closer to, say, there is a place closer to Trichy called Katumannar Kovil. I don't know how many of you know it. Till we went with the microfinance proposition, opened our branch, there was no one there as a bank. Why? Because the cost of operations and the technology connectivity was the confinement. Today, in a digital ambience, it's far more easier. And if you're computing at cloud, it becomes far more cheaper and far more accessible. So this digitization journey for a consumer is mobile app, for an institution, it is a multiple infrastructure. So once that infrastructure, which will be ready by 2 years, then it's going to be phenomenal trajectory. That is why people are hopeful that India will reach 10 trillion in next 5 to 6 years, because the flow of money and the velocity will ensure that. And to create that infrastructure is what OCEN, ONDC, unified credit lines, as you rightly said, unified, UPI, unified loan interface, multiple things are going to come, and this will come from regulator. So which means it's already regulation part inbuilt into it.
I think Neelam is having a question. Yeah, please go ahead.
We have talked about digitization and loan processing online. Just now, RBI has announced that they are introducing an app for mortgages loan. So what's your comment on that? Means mortgage loan is something where a lot many legal and technical work involved. Means first you have to go through.
India has to undergo one reformation. Okay. If you are there 80s and 90s, no, maybe you are all born. Shares used to be in physical form.
Correct.
Okay. The entire volumes picked up when it became demat. Today, entire housing is not in demat form. It's in physical form. You go back to the legal documents, see the encumbrance certificate, then you have to go and register it, MOPD in the registrar office. It's a long process, mortgage, okay, in secondary sale. Now, if this can be digitized, which it will be, because then what happens is today when you sell a share, the STT, security transaction tax, as well as tax, TDS is instantly detected. Nothing. You buy it for 100, sell it for 120, the 20 rupees, whatever it is there, deducted and paid to you. Now in mortgage, this 3 is the breaking link. And already there is a talk. How will you digitize? So increasingly digitized demat, if not, retrospectively, prospectively, it will start, which means your housing entire documents will get digitized. And that's the vacuum. The investment market picked up because it got digitized, because you could mark a lien, because you could collect the tax instantly. So it just took off on the track, and mortgage will also go in that track soon.
That is what the RegTech you have been mentioning.
Exactly.
RegTech
One is RegTech and legal tech. So there is a legal tech. If this comes together, for example, if we create a repository of based on encumbrance certificate, everything digitized, and take a digital form, take your Aadhaar. So already in your property tax, Aadhaar is enabled. Now people are working on it, how to bind it. See, there is a one complex problem in this. Suddenly, if something happens, inheritance, will management. So those are all sort of things which is in an account, you have a nominee. Okay, when transfer of house happens, there's no nominee. Multiple people will come together. This room is mine, this kitchen is mine. So those are all nitty-gritties which is getting built in. So it will be addressed. But having an app will help you, because if your credit score is good and if there is a primary sale happening, you can buy it instantly. So it will start with that, percolate to secondary market, and then it will take off.
Yeah, Mr. Murali, like you mentioning the so many digital solutions on the OpenStack levels and all. So I'd like to understand AEPS adaptability in the current market situation still is in the not that much great enough. And when it comes to the collections also, MFI collections also, what is your feedback on that, and how you would like to be addressed, since you're the micro in the sense.
We also have micro. See, ours is 85% secured and 15% only unsecured. We are
Okay.
growing with microfinance customers. See, AEPS, you cannot see it as a collateral at India level. There are two Indias existing. One is India, that is you and me are talking about cities and towns. Another is Bharat.
Bharat, yes.
In Bharat side, AEPS and ABPS is the primary driver, because we ourselves have a business correspondent. Business correspondent is a person who represents the bank, operates in places where less than 2,000, less than 5,000 as a population in those villages, okay, doing transaction and opening accounts. There, my volumes have tripled on par with UPI. Because he doesn't know checkbook, he doesn't want, there won't be any ATM. So he has to go to the nearest shop, place his finger, take his 1,000 rupees from his account. So don't see whether you have used your thumb or not. The thumb using segment in Bharat is using more frequently, and it is less spoken about. That's the problem. I think this is a feedback. We will start creating a campaign around it.
Thank you. Thanks a lot, because you've been answered me a right kind of a question from the last 2 years. I was just consulting the people from the different hierarchy levels also. They've been just unable to just cope up with they've been putting a large number of discussions also.
Mr. Prasad, let me tell you this. You asked for microfinance customer. Today, 65 to 70% of the microfinance customer pays EMI digitally. And just 2 years back, we used to go and collect 800 rupees, 500 rupees, 400 rupees. They have migrated there. So cost of collections have come down, one big thing. The cost of convenience and recon for the institution and for the individual has substantially gone up.
Thank you. Thanks a lot, sir.
Thank you.
I think Soumyaranjan, you can.
Yes, sir. Sir, my
Shorten your question. So I think Murali has to leave by 1 o'clock, right?
Max, if you leave me earlier, because I have a lunch schedule and everybody is not believing I have a lecture today. So send me the recording also. I have to go and play to them.
That's so true. Yeah.
Yeah. Sir, my question is regarding whenever you are talking about investment and all these things, but in today's scenario, as a digital transformation is there, the saving habits of the people are getting changed, because they are not prefer to save the money in the bank, and they are used to invest in some protocols. We are having many of the PhonePe and all the digital investment. So in perspective of the bank, how you see that the saving habit can change, or what kind of effect it will be on the banking system to maintain the CD ratio and all of these things?
The savers are a very important part here. India saving used to be 37-38%. It has come down to 32%. Okay. People investing in markets or mutual funds is not an issue at all, because finally you buy a stock, actually you pay someone that goes to some other bank. Within the banking system, it is there. So it's not an issue at all, buying a stock. No, where market is moving towards is, if you see Mr. Kotak is also, somebody has to mute.
Yeah, fine.
So there will be a set of customers who will migrate from savers to investors, because money's growth. I'm sitting here because I never only saved, I also invested. So one needs to understand, you need capital protection in form of TD. You need to have 6 months liquidity in savings account. Anything beyond that, please invest. Because by investing, we grow the capital markets. By growing the capital markets, there will be a spillover in the real estate market and gold. So it's a cyclical effect. The worst thing that can happen is last year in F&O, the money went out. People lost 60,000 crore. And worst part is gambling. That is Dream 11 versus, I don't want to say that I am against, because ethically it's not right thing to do gambling. And casino, people lose money. This money is of no purpose. It just vanishes in thick chain Chinese app. Money goes out of India. My request is, if you are investing, please invest wisely. That's a very good thing, because investment gives a better return. And today's generation, most of you are students, you have to go, like yesterday I was saying, they are least worried about risk and more worried about reward. But when you are focused on reward, intelligent investor on mutual fund or broking is the best thing, cash on delivery. But saving is a habit to start with. There's a good book I can recommend. I don't know how many of you have read, Psychology of Money. Please read it, because that will show you how your habits can destroy what you have earned, and what is actually psychology is all about. What is idling? What is ideology? What is your perception of money? And it will help you to grow.
Yeah, Murali, on a related aspect, as you mentioned about investment. So, no, I sometimes track this NBFC sector. So, what do you see the future in terms of valuation? Like, is it kind of, I mean, I don't want to, I mean, you don't need to mention any companies for that, but is it kind of undervalued or overvalued?
It's not undervalued, I'll say. There are certain ones who are overvalued. See, today, there's a huge capital which needs to enter Indian market, and everybody wants quick money and quick growth. And NBFCs are easy to, they have ability to raise capital in form of PEVC, or in terms of bank loan. Bank loan will get tightened because of, thanks to new norms. And third important thing is, few of them are up for only valuation game and transfer of hands. Till that time, these things keeps happening based on segments. This is going to be a valuation game. But few are long term. For example, there are big NBFCs who are there for 40, 50 years, bigger than even banks. That will continue to be, and those valuation are stable. But the higher the valuation, quicker and nimbler, it's a different ball game. But they will find liquidity, because that's why if you see few of the NBFCs are raising foreign currency term loans. I don't know, with rates fluctuating, what's going to happen.
No, I'm specifically talking about the small finance bank.
Yeah, it's small finance banks.
I mean, your type of industry where, you know.
See, in my type of industry, it's a bank, nothing to worry about, because it's regulated, licensed, and most importantly, adequately capitalized. We are 20-21% capital. So look into those institutions where capital is good, NPAs are good, and get into that aspect.
Okay. Yeah, Mala, you can.
Last question, please.
So, what about the escrow services, like escrow payment services?
Yeah, we have all banks have it, and we'll continue to have it. Will grow more. The dependent, more triparty agreements comes into perspective. More will be the escrow, and India will walk towards triparty agreements more and more, because somebody will lend, somebody will co-lend, and collection will be at the centralized account. So escrow will grow. For example, RERA, more the builders, RERA account will grow. RERA is by itself is an escrow account.
Yeah, I think with that, I think we can stop, and a couple of questions, maybe we will take it up later when we meet.
Sir, you can mail it to me. I will ensure that those answers.
Right. Yeah, I will just have taken. Yeah, so thank you, Murali. On behalf of all the participants, I thank you for your time.
Thank you.
And yeah,
Thank you.
wish you a good weekend.
Thank you, sir.
Thank you.
Thank you so much.
Bye.
Thank you, sir.
Thank you, sir.